What's up everybody? Welcome to the Stocks channel. My name is Cory, and in tonight's episode I'm doing another stock market technical analysis update. But before we get into the charts, go ahead and smash that like button and subscribe to the channel to follow along with all of my updates. First up, we have the ticker symbol SPY, which is our SP 500 ETF. So let's go ahead and crack open this chart and see what's going on in the stock market today. Alright, first things first, if you did not watch last night's episode yet, go ahead and click on that in the top of this video right now. I think it's going to be important to watch that video before this video because it's really going to help you trade over these next couple of months going into the US election. Alright, so with today's price action, we see the SPY ETF close down minus 0.95%, and we do see the price action still closing above that 20 simple moving average, and we still see that 5 EMA trading above the 13 EMA. So we still have that short-term bullish trend, but we still do have a lower low on the daily chart. As we can see here, we do have that lower low, and we also still have that negative sloping 20 simple moving average. So we're still going to go ahead and label this trend a medium-term bear trend. However, we do have that short-term bull trend, which is starting to reverse that bearish trend, and we're starting to see some positive price action. Now, we can see that if we do switch over to an hourly chart, we are holding up above this gap, and we did test this support area, which is the top of the gap at 331, and we did get a bounce off of that level today. Now, on an hourly chart, you can see that we are starting to form higher highs and higher lows, but we need to continue this trend on the hourly chart so that we can start to see that higher high forming on the daily chart. So on the daily chart, that higher high is going to be a close over the $342.52 level on the SPY ETF, and that will tell us that the short-term bullish trend is starting to turn into a medium-term bullish trend. And we really want to start buying up on these support levels, and we want to mitigate our risk by setting our stop losses below these critical support levels. So I would look to be a buyer of SPY around the $329 range, and I would like to set my stop loss below that level just in case I'm wrong and that medium-term bear trend continues downward. We'll get stopped out of our position, and then we'll still look to be buyers at the next level down, which is that $315 price target. So remember, we still have downside price targets as long as we have that medium-term trend that's bearish. And as soon as we start generating upside price targets, we'll have them right here on the stocks channel. But we need a little more price action, and we need a few more days of price action movement to really start knowing if this bullish trend is going to continue. And if it does, we will start generating price targets to the upside, and that will obsolete our price targets to the downside. So the market did get a little bit of shake up today with the Trump news, and obviously the market doesn't prefer uncertainty of not knowing what could happen from something like that. So we really just need to watch the price action and watch the trends, and we do see a very volatile day, but we do see positive price action closes still closing above those moving averages, and we still are maintaining that bullish trend with that 5 EMA trading above the 13. So for that reason, if we do get a bounce off this gap, I am going to be a buyer in the short term, and I really want to play into the short-term strength of this bull market because there's a good chance we're going to bounce up and at least test the $342 level. So if we get up to 342 and get rejected and we fail to form that new higher high on the daily chart, that'll be fine because we have a short-term long position. So we're going to enter a trade long with the mindset that is a short-term long position, and we just want to take that quick trade profit. So overall, the S&P 500 is still looking bullish in the short term, and today's close was actually a positive sign that we could see more upside price target into next week. Let's jump over to the Nasdaq 100, and we're looking at the QQQ ETF, and we see the QQQ did something very similar, also closing above the 20 simple moving average, and we still have that 5 EMA trading above the 13. We're still holding up above that gap, which is still acting as support. And if we go to a 1 hour chart, we can see that the price action got down to the gap around 273, and we did see a price action bounce closing up about $1 higher. So this gap is a critical area of support, and we want to be buyers off of support and set our stop loss below this support level if we are going to take that long position trade. So if we go back to the daily chart, we see the Nasdaq 100 is starting to form daily higher highs, and we did get a close higher on the daily chart than the September 10th high. So it is looking good in the Nasdaq 100, and we're going to let the technology sector lead the way, and we're going to go ahead and say that if technology can go form higher highs, we're going to expect the S&P 500 to be right behind it. Next up, let's take a look at the Dow Jones Industrial. We're looking at the DIA ETF, and we also do see that the Dow Jones closed above the 20 simple moving average, and we see a continuation of that 5 EMA trading above the 13 EMA. So we still have a short-term bullish trend and short-term bullish price action on all three indices, which is a great opportunity, which means they're all aligning, and that bullish trend is going to give us a situation where we could buy off support and have a quick profitable trade. So going to a Dow Jones 1 hour chart, we see that the price action didn't even get down to the gap today before bouncing. So the Dow Jones is looking very strong, but we still do have that opportunity where the price action can get down into this gap level and we could buy off that support level and wait to see if the Dow Jones is going to come back up here and test this high at 282. So if the Dow Jones could bounce off support and get a daily close above 282, that will be very bullish, and we'll start reversing that medium-term bearish trend, and we'll start to see a medium-term bullish trend, and we'll also start generating upside price targets. So on a day like today that was very volatile, we did get good price action closes, which is a positive sign going into next week. So next up, let's go ahead and take a look at the VIX, which is our fear indicator, and we see the VIX closing up over 3.48% today. And we do see the VIX closing back above the 20 simple moving average. So like I said in last night's video, we really do still have this elevated VIX level, which tells us it could be a good trading opportunity, and we could see drastic price swings and bounces off of support and resistance levels, which will make nice profitable trades. So as long as the VIX is in this range and we can see predictable resistance and support levels, we really want to maximize the trades in this time frame, and we want to take advantage of the volatility. But keep in mind, the VIX could still spike, and we could see the VIX go back into the 30s. And when the VIX goes back into the 30s, we could see those -4 and 5% days yet again. So there's still a lot of risk in this market, and the VIX is telling us to be aware of that risk. So if you are taking long positions off of support levels, don't forget to set those stop losses, because if the market does start dropping drastically, we want to go ahead and take that small loss before it becomes a large loss, and we want to put our money back to work at those lower price targets. So let's go ahead and take a look at the sectors driving this market. And the first sector we're going to take a look at is the financial sector. And we see the financial sector is starting to show positive signs that it could be reversing its bearish trend. And we know that because the price action is closing higher and higher, but we are still closing below that 50 EMA and that 20 simple moving average. So we still do have that bearish trend, and we still do have that bearish price action, unfortunately, but we are making steps in the right direction. So remember, on the financials, we want to see the financials go into a bull market if we're going to be bullish on the S&P 500. Because we don't expect to see the S&P 500 continue to go higher to new all-time highs while the financial sector's in this bearish market that it's been in. And we know the financials are bearish because we have lower highs and lower lows, and we're trading in that bearish trend because that 5 EMA is below the 13, and we have that negative sloping 20 simple moving average. So we'll keep an eye on the financials, but we are seeing some positive gains in the financials, and we would like to see this gap close, which is up here around the $24.6 level, and we would like to see that higher high form on the financials. Next up is the industrials, and we see industrials starting to snap their bearish trend with a price action close above the 20 simple moving average, and it looks like that 5 EMA is very close to crossing above the 13 EMA. So overall, that's a positive price action and a positive trend shift to the bull side, and we're getting very close to seeing if we're going to go into that bullish trend next week. So we know technology is looking strong, and we know financials are looking weak, and now we can see that industrials are starting to gain some strength. So if those financials and industrials can go back into that bull market, we're going to be very confident that the S&P 500 could go to new all-time highs. Next up is healthcare, and we see healthcare closing back below its 20 simple moving average, which we would not like to see that, but we still do have that short-term bull trend because that 5 EMA is still trading above that 13 EMA. However, closing below the 20 simple moving average is never a bullish sign, so we really need to see more price action, and hopefully we can get more closes back above that 20 simple moving average and that 50 EMA and continue to see this bullish trend gain momentum and turn into a medium-term bullish trend. So remember, with a negative sloping 20 simple moving average, the healthcare sector still has that medium-term bearish trend, and we would like to snap that as well so that we could be more confident in this bullish rally. Next up is the US dollar, and we're looking at DXY, and we do see the US dollar starting to find support around the 13 EMA and the 20 simple moving average, where we see the wick got down to the 20 simple moving average and we closed higher, which is still showing that the dollar is maintaining that bullish trend, and we would expect to see the dollar start forming a new higher high as early as next week. So with the dollar gaining strength, we would expect to see the stock market continue to correct because they do have that inverse relationship going on. Now, we don't know how much longer that inverse relationship is going to last, but as long as it's there, we want to respect it. And we have to know if the dollar is getting stronger next week, we don't necessarily expect to see a lot of strength in the stock market. So we'll continue to watch the dollar, and we'll continue to monitor that inverse relationship. Next up is gold, and gold's still doing almost exactly what we expect, which is coming back up to this previous support level and testing it as resistance. We're still expecting gold to get rejected at that $1,900 level and come back down to the $1,800 level. And we do want to be buyers of gold when it comes down to this next support level at 1800. Next up is Apple, which is our market moving stock. And we do see Apple closing right around the 20 simple moving average, which is not a great sign. We would like to see it close higher than that. But we still do have the 5 EMA trading above the 13 EMA. So we still do have that short-term bullish trend. Now, Apple is absolutely a market moving stock, and we still do have this gap below around $96. So if this medium term bearish trend is going to take over the short term bull trend, we would still expect to see Apple come down and close this gap and then continue the bullish trend. So it's still too early to say if we're going to close that gap soon, but if that medium term bearish trend is going to take over the short term bullish trend, we would expect to see a $96 price level on Apple. And then I'm looking to become a bull on Apple and look for that next bullish rally for the months to come. Next up is Tesla, and Tesla did break out of our consolidation wedge to the bullish side. And this is a great opportunity to start looking to be a buyer of Tesla off of these support levels. So the 20 simple moving average is nice and flat, and it doesn't have that medium term bearish trend that some of these other stocks we're looking at. So Tesla still has a lot of strength in it, and we do know that Tesla is a FOMO stock. So if we could see Tesla bounce off the 20 simple moving average, that would be a great buying opportunity. And don't forget to set your stop loss below your buying levels. In any event that this goes south on you, you will get stopped out for a small loss before it becomes a large loss. But I would be a buyer of Tesla coming off the 20 simple moving average with a price target of $500. Next up is Bitcoin, and Bitcoin's still in that consolidation wedge where we're really just winding up, building up energy, and we want to see if Bitcoin's going to break to the bull side or the bear side. When we're in a consolidation wedge, we don't want to guess which direction it's going to break. We're just going to simply wait and be patient. And if it breaks to the bull side, we want to be a buyer of Bitcoin because it should get back up to that $12,000 level in a flash as soon as it breaks out to the upside. If it breaks down to the bearish side, we're looking for our support trend line to hold up as support, and we would look to be a buyer off of any bounce off of support, which is right around $9,800. So going back to the S&P 500, we still don't have that daily higher high, so we can't get too bullish on this market just yet. However, we do have a positive short-term bullish trend, and we do want to try to take advantage of that and try to buy off some of these support levels. So on the S&P 500, don't forget we have support at $331 and $329, and we want to try to see if the SPY ETF is going to bounce off those levels. And if we can see a confirmation bounce off of support, we want to buy in and we want to try to ride the SPY ETF to 342. And then if we can get a close above 342, we're going to become more and more bullish on this market, and we'll start generating upside price targets right here for you on the Stocks channel. So please remember to smash that like button on this video to help me out. I really hope these videos are helping you out, and don't forget to subscribe to my channel so you can follow along with all of my updates. Thanks for watching, everybody. Have a great weekend, and as always, I will see you in the next episode.